So this is Eric Mashinsky with the Gold Investment Letter Phenom Ventures. Today I want to talk a little bit about the opportunity that I've had for over a year to collect north of 8% interest on my US dollars for savings, which, if compound interest is back in a 0% environment, that's very interesting to people, but I don't think a lot of folks know about it, certainly in traditional finance. So our members, our elite members at the goldinvestmentletter.com, were privy to this probably 4 months ago, 6 months ago, probably over six. And I just shared what I'm doing with my money and have done for well over a year in compounding this interest. So I think that will be something we can get into today that you can actually take your own actions on and benefit from unconventionally. So back in 2016, I was looking at my initial Bitcoin purchases on Coinbase, which were in the $500 to $550 area. I covered it in the Gold Investment Letter and we sold it too early. We traded it out around 2,400 and later on was enamored with the space. And what happened was I ended up essentially telling everybody, even the free newsletter, that I started to accumulate a position in Bitcoin and other altcoins that I didn't mention that were riskier. I have a tech VC background as well. I'm an active angel investor in Silicon Valley. So I think the money side with gold, the monetary system that we have, the fractional reserve banking system, I've already known about these things. And also on the tech side with a network effect and other things that we're in a 21st century in terms of how we use digital technology. And so I put those two together and I said, this is an opportunity to accumulate a position, do so steadily, one that if I have problems in the future, I'm not going to have to puke it out at the low. So that was done very, very regularly for these different coins. And it ended up where the market gave us a real runway to do that over the course of 2.5 years. And along the way, I started to really get sucked in to the layer beneath the Bitcoin story, the Ethereum story, because now you're seeing DeFi, decentralized finance, that is really exploding in terms of these coins that are going up, coming from obscurity now into the top 25 with Uniswap and a bunch of others. And I started to look at that from the angle of when I was involved with the internet bubble, I was a brand new broker, I was young, and if I looked at that longer term, instead of playing hot stock trades and learned how the actual internet worked, I would have made way more money. I've always said that if you were a vacuum cleaner salesman and you were the first one to get Google AdWords, you're the biggest vacuum distributor in the world. So I went with that mentality to dig into how I could utilize this new world for my own investing benefit. BlockFi right now, I just looked, they're paying out 8.6% annual percentage yield. And that is on the Gemini US dollar. It's a Coinbase and it's a big consortium US dollar called USDC. So BlockFi, they have a couple of different angles that I've tried out and I've looked into to feel a comfort level with how much money I have there and have continued to put there as recently as last week. And by the way, that includes a portion of my Bitcoin position, which gets paid a little over 5% for the first 2.5, and then it's 3%. Then you have Litecoin and Ethereum, which are really nice rates, around 5%, 5.5% as well. But you know what? The amount of interest you're gathering, what do you need? 6 years and you're break even. So as long as it doesn't happen too quick, it's really interesting how that compound effect will kick in. But with BlockFi, they are dealing with individual loaners, so retail people who are not wanting to sell crypto. So look at last March when the world was destroyed everything was flipped upside down. And essentially, people didn't want to puke out their crypto at the lows. Bitcoin was cut in half in a day, went down to the 3,000s. And so BlockFi steps in and says, you have collateral here with us. If you don't want to sell it, we'll give you a loan. And I did this recently when I closed on a house. I figured I'd see and get a little extra cushion and see what it was all about on the other side. And they make you put up, a good 2/3 of what you're going to put in. And the margin call levels, the SMA levels, they're much healthier than a broker dealer. They're more aggressive. So if I've got that in queue, 1/3 of against my holdings of Bitcoin or USDC or whatever it is, then it's very, very unlikely, especially as a group that is vetted in this area, to really just completely go bad on our obligations. So I did this with my house when I bought my house recently, and it was very, very easy. I mean, I couldn't get a loan at my bank. I had one issue with, just filings and stuff that they couldn't get past, even though I've been a customer there for well over 15 years. And my broker dealer, my main online broker dealer, they offered me a line of credit of something like 6% of what I had with them. I'm like, you guys are useless. So I went to BlockFi and I get, 1/3 of everything I have there is offered right back to me with a reasonable rate. It was like 12%. I think it was 12-ish%. So that's where they're able to cut out, they do it with the majority, which is very interesting. They take the majority of what they're getting for payback rates, and they give it to the lenders that are borrowing their Bitcoin, borrowing their USDC to help them settle on not only the loans, but it's really just on the custody side with a lot of these institutions, which I'll get into in a second. But that's how they do it. And now, do you have blow up risk with the lenders? I mean, you do, but as long as they're taking that intermediary risk, it's not 1-to-1, which I felt good about. The second one is on more of the institutional side. And you guys have done work on this at Real Vision, which is, more apropos for the institutional crowd. And it's really, it's very interesting because you could have real big funds, like huge funds. And I think the majority of BlockFi's interest is actually not derived from retail. It's from institutions, because from a custody side, they have to settle on this stuff long or short, daily, just like in equity markets and other markets that we deal with. But they're able to borrow this out. And if you look at the annualized rate, even if it's a small amount for an overnight or whatever it is, they can certainly afford to pay, the premiums that they do with those two combined. I would say it's probably closer to the equity market margin model. That is like, they're actually sharing something with people that send them a ton of business and assets. I think, the way that I look at this, it's a whole different ballgame. Like, if the Fed has forced, and these low rates have forced all of us, people to take risks, right? I'm very comfortable taking risks. It's where I swim and live, but not everybody is. And I don't want to do that forever. And I don't want to do that after I have a Bitcoin, buy an investment that's already up 14x since March last year. There's probably some stuff I want to take out and off the table and put into safer vehicles. So gold is a big go-to as a store of value that actually has, people don't really realize this, but since 71, when you take the gold standard out of the equation with President Nixon, where nothing was backing the printing of dollars, gold has outperformed the S&P and stock markets markedly in terms of the average annual return since then. It differs in 20-year periods, but that to me is a comfort level of a store of value. So I have an accumulation strategy there with gold. And then in addition to that, with regard to the forcing of us taking these risks, or you just take volatility risk, right? So, if you're going into a bond that's whatever rated, and not only volatility risk, but blow up risk, to get higher rates of return. And if you add this into, added this into my cache, my portfolio, I don't have to do that, So I'm collecting, and I have been collecting interest payments on putting my mostly USDC, the dollar stable coins, because it's my cash savings, even though I do take advantage of some of the staking opportunities that are out there, which I probably will get into either the next video or the one after. There's a lot of yield that is coming back and in different forms. So yes, if you are able to have that option, would you be taking all of this risk where you are? I'm basically a venture capitalist, whether it's in junior mining stocks and financing those and investing in those, or been in tech, going back to when I was a broker years and years ago. This has been my focus. I'm very comfortable with high risk, high reward situations. I don't do back of the napkin stuff, but I've had enough experience, public and private markets, in both. And really, you see that Bitcoin has been a new age educational tool to this millennial generation and below about our central banks, our monetary system, the fiat system. And if that wouldn't have happened, I don't know, people would have sought out gold certainly as much. And the gold people are stuck in the mud. The gold folks, you've got the gold bugs, which I always say I am not. I'm a gold bull. And that may change, other than the fact that this is a very, very predictable role that gold has played throughout a long period of history. And that is a store of value, a true store of value. What I earn today and the energy I put in, the time that I put into work and producing a gold piece of savings tends to carry its value well into the future. But the gold crowd has been very, resistant and reluctant. It's like everybody, and I probably would say even the folks that have been on Real Vision that are very involved in crypto and Bitcoin, we go through these little steps because we're not sure what the heck it is and we don't know how it works. It works like if you go onto a major platform like BlockFi, Coinbase, any of these, it's the same sort of thing that we do with our brokerage accounts or online bank accounts. You just connect your account, checking account, you send it over, you can liquidate, send it back, whatever you want. But we have to go through those steps. And so the actual compounding interest area with these type of lending platforms and custody platforms, I didn't really come into those until probably around the middle of, it was even before that. It was over a year and a half ago. And I started to slowly go in, and I have built up to where now it's a significant portion of my savings. And will I go back into gold? I don't know. I mean, I'm pretty happy with 8.6% in cash. I already have a ton of gold and exposure in the metals. With crypto, no, I don't. My return profile on crypto had to be extraordinary to really go in there as heavy as I did, at the price points I did, and as wide as I did. And that has already started to come to fruition. My Bitcoin is not going into gold. It's staying in Bitcoin because Bitcoin has a long way to go. But with my safe money, if I can get income like that, or even less, I'm happy to start shoving that away for a rainy day. So if you want more information on these type of strategies, unconventional, protecting your money, but also, we look at the end of the day, I look for absolute returns. Goldinvestmentletter.com. Sign up to our free e-letter, start to get a taste for what we come out with. If you really want much more action, sign up for the premium newsletter. You can also follow me on YouTube. I've been doing more videos here. And next time, I do believe that it's very important to come into the toughest part of the business. I think it's the toughest part of the game, which is how to sell, how to take profits, especially in stuff that works, like huge. How do you do it? People ride them up, ride them back down. It's very tough. And I'm going to talk about that. So join us.